If you were to ask me what my favorite dividend stock would be, it's VICI, and it's really not that particularly close. There's a number of reasons I like it. Let's break down some of them. So one, the dividend is substantial. It's over 5%, 5.34%. That is obviously not the tippity top, but once you start getting above that 4 to 5 range, that's really pretty solid. And there's honestly two types of dividend portfolios, or two aims and goals with dividends that I see personally. One is somewhere in that 4 to 5% yield range, even closer to 3.5%, while you're trying to match inflation. So you can get that dividend yield you get from the stock or the stocks you own, and then you don't really have to worry about reinvesting it. It's going to match inflation. You just move on. And then another one is maybe that higher yield, that 6 to 7%. And I think VICI fits perfectly into that first category. You're going to get over, at least right now, over 5%. And there's many times, even recently, you could have got it substantially lower. And I was buying here when it was in the 27, 20, whatever range. Honestly, anything up below 30, for me personally, is just screaming buy for VICI. And oftentimes when I'm putting money into the market, maybe there's nothing that's screaming buy to me. I just want that safe dividend it's going to give me. I like the diversification because I don't own a bunch of dividend stocks. I don't own a bunch of REITs. And it's one of the better REITs out there too. I assume most of you know what REITs are. They're just generally real estate stocks that are aiming to provide a large dividend. That's how they pay out most of the money they make to shareholders. It's one of the better REITs out there. There's quite a few REITs, and some can do very well, but it's one of the most balanced as well. It hasn't been around forever, but going back to 2017, since it's been around, it's also done very well on the share price, and you have matched inflation since it's been around. Of course, there's no guarantee it will continue to do that, but if you're even getting anywhere near this 5% yield long term, it's very, very good. So like I mentioned, VICI is a REIT. They own a lot of land, specifically in Las Vegas, things like that, higher end resorts. I like that. I think that's good. There's not a lot of REITs in general. I like diversification into REITs. Maybe you own a lot of real estate personally. Okay, that's a little bit different. Obviously, this is a much different type of real estate. I still think it's decent diversification. Probably most of you aren't owning casinos in Las Vegas. I doubt anyone watching this video is doing that. You probably own a house. Maybe you own a few real estate properties. Me personally, at this point, I don't own any rentals, anything like that. So I like some exposure to real estate, even if it's not necessarily something like apartments or whatever. REITs are good. There's not a lot of them. There's not a lot of them that are particularly large. That's just the reality. This is a $34 billion market cap. We're used to looking at the Nvidias, Microsofts, Googles of the world with those insanely high market caps, justifiably so that they should be that high. There's not a lot of large REITs. So diversification into REITs, in my opinion, I want some of that. And if I want some of that, I want VICI because they are very well run. I just think they're a well-run company. They locked in a lot of rates low right during COVID, right before rates shot up. And I don't understand all of it, but from my basic understanding of how it works is it's loans are a little bit more in the business side of things dynamic than something like a house loan or something. You don't just lock it in forever. So locking in loans are very important, but they've also done very well as a company. We see, like, obviously COVID was a particularly poor year for most people. 2021 was really good, but they've been increasing revenue, increasing operating income pretty dramatically, certainly more than you would think they would be able to. But like I said, that's just kind of a snippet. Maybe it's not the full picture. 12.5% for PE, forward PE is low as well. That's not bad, but although if I'm being completely honest, it's not as important for dividend stocks. Of course, PE is important. It's always important, but it's just different because some just trade in specific ranges, and it's just different. When I'm looking for in a dividend stock, primarily, one is the long-term movement of the share price itself. VICI hasn't been around super long-term. You may think 2017 is fairly long, and it's not a terrible time frame. It's not like we have no understanding, but it's not like 20, 30 years. We can look at something like a Pepsi. It's been around forever. So we can look at the share price and say, okay, over a 25-year period, this doubled inflation. So we can probably expect to get this dividend yield and then double inflation, somewhere in that. With VICI, we can't do that. However, in the short time frame we've seen it since 2017, it's still up 61% in terms of share price. I wouldn't be surprised, and honestly, I would expect this company to roughly match inflation, maybe slightly overperform, and if it does, we're getting inflation matching, and we can not worry about this nearly 5.5% yield that we're getting having to put that towards reinvesting or anything like that. Of course, it may happen. We don't know that. But with a company like VICI, that's what I expect it to do. So when I'm looking at that share price, obviously short time frame, I'm looking at the share price appreciation plus the dividend yield, and then also the PE looks fine as well. That is a solid story for success. It is. Like I said, also good exposure. I love tech stocks. I absolutely love tech stocks. I cover mostly tech stocks on this channel. I own plenty of them. However, I'm not going to be 100% in tech. Tech has been dominating, but I still want exposure to other areas because there's going to be times when, like today that I'm recording this video, the 27th of February, 2025, tech got crushed. Lots of things got crushed. Worried about tariffs. It's this, it's that. Yesterday was amazing. The sky is falling. That's how the world works sometimes, in stocks like VICI are going to perform better in that time frame. Look, we're flat, right? We're down a little bit more after hours, but normal hours, we were flat today. You're going to be able to get that dividend yield in a downturn. So it's good diversification as well. Probably many of you watching this video really like dividends. But you probably own plenty of tech as well. For me, this is great diversification to a stock that's going to give me a solid dividend yield. And if I have to diversify outside of tech, which you should do, I want the best of the best of the best companies. In my opinion, VICI is that. So anyways, that's all I really got for this video, guys. If you enjoyed, appreciate if you like and subscribe. I do daily stock content on this channel. I appreciate you for watching, and I'll catch you next time.